All right, so I'm going to show you guys how to go from a break-even trader to a profitable trader. Okay, this is the shit that nobody talks about. All right, so if you've been losing money, you're kind of in this stage where you're back and forth and you want to get to here, then this webinar is going to be for you. Okay, if you've been trading and you feel like you're on the Titanic, maybe your ship is above water, so maybe you're not drowning, but you're still not moving anywhere, right? Maybe you're above water, you're doing okay, but your just account is not growing, right? Your ship is not moving forward. Then this is going to be for you, okay? Or if you are losing money, honestly, because this is also going to help you out a ton with that as well. So now, why should you even listen to me? Okay, quick background. I started trading from my high school library. Okay, I worked at Bed Bath & Beyond, funded my first 1K account, which I blew up in 3 days. Then I drove DoorDash for 2 years to continue funding all of my blown up accounts. Ended up having about 12 of those. And now here I am. Okay, I've been trading 6 years, got profitable at year 3. I have hundreds of thousands in profits. I've been through that break-even cycle for over a year, and I'm a nerd. And I basically mean, what I mean by that is I've kind of broke down why I was unsuccessful and figured out how to reverse engineer it so I could help others become successful. So I'm kind of a nerd with all that. And the other reason you should listen to me is because I have people from Africa who are willing to slaughter a goat for me, okay? And there's also a lot of people who tend to like the stuff that I put out, so it might be worth your time as well. Now, I do only have one guarantee for you, though, okay? That is if you are currently not making $10,000 a month consistently, or your account is not growing consistently, then this webinar is going to be worth your time, okay? I can actually prove it to you. Because what you're going to be getting access to when you leave this webinar are a few things. Okay, the first one is you're going to learn the 3 reasons why you're still break even or losing money, okay? You're then going to learn what actually makes someone consistently profitable, because most people tend to get it wrong. They really just don't understand it. You're going to get concepts, tests, and tools I've created myself that have helped me go from that break-even cycle to about 10K per month in profit. And I'm also going to give you actionable steps that you can see improvement in your trading immediately, which is really cool because nobody else really does that. And it pisses me off when I watch a video and then I'm kind of just left with information and no, actionable steps. So I'm going to give you stuff you can actually do after this webinar today that will help you see improvement in your trading immediately, okay? And to know I'm not bullshitting you, I'm not here to sell you anything. I give you my word on that, okay? I have no course, no Discord, no alert room, no funded accounts, whatever people are selling these days, okay? I do this because I get hundreds of DMs with the same exact issue. It's getting really annoying answering all of them. And I have a 15-hour plane ride to Dubai, I'm now in Dubai as I'm making this, but I was very bored on the plane, so I said, screw it. I'm just going to go ahead and make one. Now, what I want you guys to do now is make your decision. Okay, I want you to really commit to saying, are you going to spend the next 20 minutes of your time to learn how I escaped a year-long break-even cycle and began making 10K per month with trading? Okay, so I want you guys to pick right now. And I also don't want you to half-ass it. Okay, if you are going to pick, then don't be walking a dog, don't be doing the dishes, don't be scrolling through TikTok. Really pay attention. Okay, I really want you to give yourself and commit to it if you are going to actually watch this. Okay, and for those of you guys that do, you're a real one. Okay, what I'm going to do is going to hook you guys up with a free supply demand course that I made exactly for you guys. Okay, I'm just going to give it to you guys free. Okay, now, why are you actually here? Okay, enough of the bullshit. What are you actually here to learn? Well, I'm going to show you guys the keys to getting out of that break-even cycle. Okay, I'm going to show you the exact tools that actually changed my trading, that really took me from that break-even to making money consistently and actually seeing my account grow. But first, it's really, really important that you must learn the reasoning of what actually makes someone consistently profitable. It's actually very simple. I give this analogy all the time, right? Think of it like a puzzle, okay? Now, if you try to solve a puzzle without knowing what the picture looks like at the end, it's going to be very, very tough, okay? Nearly impossible. It's definitely possible, but it's extremely tough, okay? Trading is the same way. If you don't know what actually makes someone profitable, if you don't know what the picture looks like at the end of the tunnel, then you're not going to know how to get there, okay? So it's really important that you actually understand this and apply it. Otherwise, it's not going to make any sense to you. So what actually makes someone consistently profitable? Well, I'm about to show you. It's what I call the success triangle. I'm not sure why I called it a triangle because this is more of a Venn diagram, but whatever. So there's actually 3 things that make someone successful, okay? It's going to be risk management, proven strategy, and psychology, okay? You need all 3 of these if you want to get to that profitable stage, right? And I know what you guys are already thinking. I know what you guys want. You guys want me to pull up the charts, show you the holy grail strategy, show you where I enter, where I exit. You think that's going to solve all of your problems, just like it did for me 3-4 years ago. But the crazy thing is I could hand you guys a proven strategy that's guaranteed to work with exact entries, exact exits, and 95% of you guys would still screw it up. Okay, you still would not be profitable with that information because you don't have the entire success triangle figured out. And this was a huge misconception for me as well when I first started, okay? Back when I was on the Titanic and I had a winning system, okay? And, I was above water. I wasn't necessarily losing money, right? But my ship was still not going anywhere. I was still just kind of staying flat. It was because I was missing the two other aspects to the success triangle, okay? Now, what I want to do with this webinar is I want this focus to be on risk management, okay? So this part of the triangle. Now, at the end of the webinar, if you're still struggling with the other two parts, I'm going to help you out. I'm going to show you how to deal with that, okay? But for this one, it's going to be on risk management. And I already know what you guys are thinking. Jordan, I already know to risk 1 to 2% of my account. I already know to use a stop loss, okay? I understand risk management, Jordan. How are you going to do a whole webinar on that? It's not my issue. The reality is it goes much deeper than that, okay? This is important, this stuff here, but it goes a lot deeper. There's actually a lot of hidden stuff in there that's actually causing you to not make money without even realizing it, okay? So what I want to do now is I want you guys to actually grab the popcorn, okay? Grab your pen and paper, get ready, okay? This webinar is going to completely change everything for you and probably make you a ton of money, all right? So let's go ahead and get into it. So risk management, there are 5 components that make up risk management. You need all of them to be successful, okay? I'm about to show you number 1 right now. So number 1, I know I just said previously, risk 1 to 2% of your account, okay? Even though it does go deeper, that is one major aspect to risk management, okay? Is risking the right percent of your account. Now, 1 to 2% is pretty good, okay? But to be completely honest, if you have a small account and you're trading options, you can move it up to 5, okay? You can get a little crazy with it, okay? Now, as your account starts to grow, you really want to decrease it. So medium accounts, 5K to 25K. You want to leave it at 2 to 3% max risk per trade. And with large accounts, 25K plus, I recommend 1%. You can also make this 2% depending on your strategy. We're going to dive into this a little bit more later on in the webinar. But this is the basis of risk management, okay? Very simple, very easy to understand. Write this down, screenshot it, do what you got to do. We're going to move on to number 2, okay? I told you guys I'm moving quick. I don't want to take up too much of your time. But if you need to pause it, go ahead and do that, and then we'll move on. So number 2, keeping risk constant. Okay, I'm going to talk about this for a little bit. This is very important. Okay, let's say you have a 10K account, and you are risking 2% of that account. Okay, that's going to be a $200 risk per trade. Now, if you want to see long-term success, if you want to get out of that break-even cycle and really build your account, your risk should be within a 20% margin of error max. I know you're thinking, Jordan, what is margin of error? What are you talking about? I don't even understand that. Chill out. I'm going to get to that, okay? 20% margin of error max. So let's think about that. Let's break that down. If you have 20% of that $200 risk per trade, that's going to be a range, okay? So 20% is going to be $40. And we break that up to a range. So we add $40 to 200. We subtract $40 from 200. And we get a risk range of 160 to 240, okay? Now, in a 10K account, right? Like I said, we're risking 2%, $200 risk per trade. Ideally, in a perfect world, in a perfect scenario, you'd be risking $200 in every trade. So every single trade you have, every single red trade is going to be a $200 max loss every single time, okay? Now, again, that's a perfect world. Actually doing that every trade is nearly impossible, okay? Now, with shares and futures, it actually is kind of easy, if I'm being honest, right? If you have one ES contract and you're risking, $50 a point, you want to risk $200, then you just risk 4 points. Now, let's say you want to risk 8 points. All you have to do is take 5 micro contracts, okay? And then you're risking $200 every single trade, okay? Same thing with shares. But with options, it can get tricky. This is the biggest downfall that happened to me, biggest downfall for a lot of people, okay? They trade options, and they say they're going to risk $200 every trade, and then it just ends up being $300 one trade, $500 the next, $150 the next trade. It's very back and forth, okay? And what we want to do is stay within that range of 20%. So if $200, 160 to 40, every single trade should be within that range. I'm going to dive into that a little bit more. But options can get tricky. So I'm going to show you guys how to basically deal with that. So real quick, I can get into a $400 option, right? I can risk 50%. That's going to be a $200 risk, right? That's exactly what I'm talking about in this scenario. Now, if I'm trading based on the chart, which is what a lot of traders do, is they trade based off the chart and the price right in front of them, then it's tough to manage what that risk will actually be, right? If I'm looking at an Amazon option here, let's say I want to get in right here at this level on Amazon. And let's say I want to put my stop when Amazon gets to 124. Okay, my target's all the way up here. Now, if I'm looking at, a specific option here and I get in, I'm getting in around, around 20 cents, okay? And then the option hits a low of about 11 cents. So in the option, I'm already down 50%, right? If I get in with $400 on this option, I'm already down at my $200 risk. But we haven't even came close to my actual stop on the chart, right? So if we actually did come in on my stop, this would probably be worthless. I'd probably be losing $400, right? So that's where the big discrepancy gets, is when your risk is not matching your actual trades, okay? I'm going to break this down for you. So our goal as a trader is to keep that margin of error as low as possible. Okay, the tighter we keep our risk, the more profitable we're going to be. Right? If you remember the previous example, I said 20%. Excuse me. If I said 20% margin of error maximum. Okay, so on a $200 risk, that would be a range of 160 to 240. Okay. Now, if we can get that margin of error down to 10%, then we'd have a risk range of 180 to 220. If we get it to 5%, it'd be 190 to 210. And if we get it to 0, we'd be risking $200 in every single trade. Now, like I said, with futures and shares, it can be easy. But with options, it's tough. But our goal as a trader, and what's really going to break that bottleneck to make sure we can see our account grow consistently, is keeping our risk the same and getting that margin of error as low as possible. So, how do we trade options to risk the same amount every trade? That's the big question. Okay, or at least not same amount, but how do we get that margin of error down to the lowest we can get it? I have 3 solutions for you. Okay, so I want you to grab your pen and paper. Come on, this is crazy. We're still on step 2 of the 5 risk management. Okay, so within step 2, I have 3 solutions. This is getting crazy. All right, so pause it if you have to. Get ready. All right, we're about to dive into some stuff. So solution 1: options charts plus strike selection. Okay, the cool thing with certain brokers, especially Thinkorswim, I know there's a few others out there, you can chart the options, okay, and you can actually do that to understand your risk. And then all you need to do is size appropriately based on the math, all right? So basically all it does is 2 steps here, right? You look at the options chart and you compare it to your chart on the underlying. So let's say I'm looking at Meta, okay, and I'm looking to get in, right as price is right here, okay? And my stop is going to be right at the low of the day, okay? Let's say I'm looking to get long, right? So I pull up a Meta call, okay? And I say to myself, all right, if I want to get in right now, price is around, we'll say $5 an option, okay? And I know my stop right at that low, it's going to be around, we'll call it 380, right? We'll say 380. So if I'm getting in at 5 and my stop is going to be at 380, I know I'm risking $1.20 per contract, which is $120 risk per contract, okay? So if I know that and I know how much I want to risk, then all I have to do is use the math, right? If I want to risk $120, I get 1 contract. If I want to risk $240, I get 2 contracts. If I want to risk, I don't know, my math is bad. After that, then I risk 3 contracts. You guys get the point, okay? So that's the first thing you can do. Just pull up the chart, pull up the option, put them together, and you can basically see where your stop loss is going to be, all right? Now, solution 2. You can learn the stocks you trade and their options specifically. This is really, really good for people who like to trade the same thing over and over. So if you trade SPY every day, you trade SPX, you trade QQQs, you trade Tesla every day, no matter what it is, this solution is going to be really good for you, okay? And I actually done the work for you guys. I'm going to explain what this means. So all you have to do is look at the options chart, or you can do it with a paper trade, write out the risk for X amount of points, and then write it in a table so you know how many contracts to take. I know that didn't make a lot of sense, but stick with me, okay? So for me, I like trading SPX. I wanted to risk $500 a trade. So what I did is I typically like getting 4 days to expire options, and I like getting them at the money. So one day when the market was open, I said, okay, let me just look at the 4 days to expire at the money contracts and see what happens. Let me just look at the options chart, pull it up just like this, and say, okay, if price moves 1 to 2 points, how much does that move in the option? If it moves 3 to 4 points, how much does that move in the option? And I calculate it in a way so I know exactly how many contracts to take if I want to risk $500. Really, really simple. Okay? So you can even use this for yourself if you trade it, but it's better if you want to make your own. Okay? So for me, if I know I'm trading SPX and I'm risking 6 points, then I should take 2 contracts of the 4 days to expire at the money contract. It'll be around $500. Okay? Really simple. Now, solution 2 completed. Solution 3. This one's more for swing traders. Okay? It's a simple website you can use. I'm not affiliated with them in any way, but it's optionsprofitcalculator.com. Okay? What you do is you type in your option, you type in the date, and it shows you what that option is going to be worth at every price and at every date until expiration. And so you can literally use this to see exactly where your stop loss is going to be, at what time that stop loss may hit, and then use your risk based off that. Really, really simple. Again, not affiliated with them in any way. I just really love their site. I use it for swing trading all the time, and it lets me know exactly how many contracts to take, which contracts to take, all of that good stuff. Okay? So, again, we're now done with 2 of the risk management components, right? We have 5 of them total. I'm going to get to number 3 right now, okay? So, number 3, grab your popcorn, get ready. Income relativity. Nobody talks about this. It's very, very important, okay? I didn't understand this as well until I realized it, and it actually changed everything for me. Self-awareness is key. You have to know yourself so you can know how much to risk on each trade and also how much to fund your account with. So, I'm going to give you guys an exact test so you can figure this out for you in the next slide. But think about this for a second, all right? I know a lot of people, okay, who are very poor, who just, for whatever reason, they just spend money like it's nothing, okay? People who are very poor, and they can just spend $1,000, and it doesn't even matter to them. I know a lot of people who are very rich, and they're very, very the opposite, right? If they lose $1,000, they freak out. They're like, oh my God, no, I need my money, blah, blah, blah. And I'm talking rich, like millionaire status, okay? So what you need to do is figure out what kind of person you are and how much is actually a lot of money to you. Like, you know, how much isn't enough for you to really not care if you lose that amount. And actually, I'm about to show you guys a test you can use for this, all right? So this is a test I came up with. It's a game-changing test, and it actually, connection's back. And it basically shows you exactly how much to risk. So I call it the income relativity test. Okay, if you remember back in the beginning of the slide, I work at Bed Bath & Beyond, so I compared it to this. Let's say you go to Bed Bath & Beyond. You get a faulty product. Okay, let's say you buy yourself a toaster. You get a nice toaster, you need a new one, you bring it back home, and you find out it doesn't work. You can't call them, you can't do anything. The only way for you to get your money back is to drive to the store, and they'll give you a full refund. Okay? Now, let's say this store is an hour away. So you gotta go an hour there and an hour back. Okay? How much would that toaster have to be for you to drive to the store, an hour there, an hour back, just to get that refund? Right? For some people, it'd be $25. Okay? For me, it wouldn't be $25. Okay? I'm at the point now where $25 is not worth 2 hours of my time. Okay? Or the stress. For some people, it may not even be $1,000. Right? It may not be worth their time to go all the way to the store, $1,000, hour there, hour back, just to get that $1,000 back. Okay? So you need to figure out how much would that toaster need to be for you to actually go to the store an hour there and then drive an hour back just to get your money back. Is it $50? Is it $100? Is it $10? Is it $500? That number is how much you want to be risking per trade. Okay? That's a good gauge of how much you want to be risking per trade. Okay? In terms of income relativity. Just in this. Not really account size, but just in income relativity. Okay, so you got to figure out what that number is. Really ask yourself, if you bought a toaster and you have to go 2 hours just to get that $30 back, is that worth your time? Is it worth it? Maybe it is, maybe it isn't. Okay, use this test. It's going to help you out a ton. All right. So, number 3, now that you got the income relativity out of the way, you understand yourself, you're going to use this. Number 4, account size. All right, this is really, really crucial. Okay, you may have thought of this before, maybe you haven't. Let's say we want to risk $500. Let's say we go back and we find that $500 is the max amount of money I would go to the store to return that toaster. Okay, perfect. Now the question becomes, if I have the capital, do I put $50K into account and risk 1%? Or do I put $10K into account and risk 5%? Right? You're still risking $500 in every trade, But one of them you have 10K in your account, the other one you have 50K. All right? So here's how you figure that out. It's actually pretty simple. If you are more prone to emotions, you typically want to go with a smaller account and more risk. If you are more of a disciplined, very disciplined person with your emotions, right? You're less prone to blowing up your account, then you can go with a higher account and less risk. Okay, so you want to go with the 50K account, risking 1%. Okay, so it all ties back to self-awareness. You have to know yourself. You have to know how you act. And by doing that, you're going to know exactly, if you should fund your account with a lot and risk a little, or fund your account with a little bit and risk a lot, right? You also need to have the capital anyways to do this, but this is a really good step just to make sure you get that figured out. So that is risk management component number 4, okay? Make sure you write it down. Make sure you figure this out. It's going to help you out a ton. Number 5, this one is extremely important, and the slide after that as well. Option selection, all right? This one's for the options traders out there. Now, again, let's say you want to trade based off the chart, not the option. That's what we like to do here. Let's say you want to risk 10% on a $1,000 in the money option, or you could risk 50% on a $200 out of the money option. You're still risking $100 a trade, but similar to the account size one, you're either risking a $1,000 option with 10% or a $200 option with 50%. So which one do you actually take? Okay, this is very, very key, very key. So I made a little chart for you guys. Okay, it depends on 3 things. 1, self-awareness. 2, your strategy. And 3, your account size. If you have a larger account, you typically want to go with this option. Okay, you're risking 10% on a 1K in the money option. It'll be a little bit better than doing it for this one if you have a smaller account. Okay, if you have a small account, then you want to go, smaller size option, risk a little bit more. Okay, shoot for a higher risk reward, right? Risk 50%, make 100%. Okay. Next thing is give me your strategy. This is probably the most important. All right. If you are doing scalping, breakouts, quick trades, doing this makes a little bit more sense. Okay. If you are swing trading, you're using automated stop losses, your trades are a little bit longer, then it may make more sense to you to risk a little bit less on a $1,000 in the money option. Okay. And last thing is self-awareness. If you're an emotional person, okay, it may even make sense for you to risk 100% on a $100 option. Okay, that way you don't even have to worry about a stop loss, right? If you're somebody who just doesn't get out your stop, then just risk 100% of the option and go for 200 to 300% gains. There's nothing wrong with that. I know a lot of people that make money doing that. Okay, if you are pretty emotional, maybe that's not what you want to do because going for 200, 300% can be tough. So you just risk 10% and you go for 10, 20, 30%. Okay, really, really simple. So those are the 5 different components. I hope this didn't take too long. Now, here's extremely important what you need to figure out, all right? Learning information doesn't mean anything unless you apply it, okay? I don't want you guys to waste the last 20 minutes that we just went through, all right? So I have 4 actionable steps for you to do. First thing is I want you to rework your risk management by going through the self-awareness test and coming up with your risk, okay? Figure out how much your risk should be. I then want you to use the solutions mentioned earlier, so go back through this if you need to, going through the option charts and creating risk tables for yourself. I then want you to write down what you can do to lower your margin of error using the strategies in this webinar. Okay, whether it be with options, whether it be with looking at the chart, whether it be with whatever I mentioned, write it down so you can figure out what you can do to lower your margin of error. And the last thing I want you to do is look at your journal and see what part of the success triangle you're lacking. Okay? Now, if you don't have a journal, that's a whole other issue on itself. Get a journal ASAP. Okay? But really figure out and just look at your past trading and ask yourself, do you have everything of the triangle? Do you have a winning system? Do you have risk management? Do you have psychology? Now, if you don't have the proven strategy part or the psychology part locked in, like 100%, you're a beast at it, right? A master at it, then here's what I want you to do. I want you to click the link below this video, okay? Because I have a free training where I break down the 3-phase system I use to trade, okay? And that's going to help you out a ton with the strategy and the psychology part. Okay? So don't waste 20 minutes of the time you just took. I want you guys to take action. All right? Actually do some of these steps above. Otherwise, you're just wasting your time. Okay? And also, by watching that video, if you remember that supply and demand course I mentioned earlier, that's how I'm going to be able to send it to you. Okay? Because I don't have your email right now. So by clicking the link below, you can give me your email, and that way I can actually send you that course. All right? So killing 2 birds with 1 stone. So hope you guys enjoyed this webinar. Okay? Like I said, if you're lacking this and you need help, click the link below. I have another training for you, completely free, breaking down my 3-phase system, and you'll get my free supply demand course. All right? So a lot of really good stuff. So click the link below. Give me a shout out. I love you guys. I'll see you guys in the next webinar.